right, let's start. So the Affordable Care Act, this is under Code Sections 6055 and 6056. These are reporting rules for certain employers. And as I indicated during the presentation, 6055 indicates insurers and self-insured have to report coverage. What they're doing, they're providing evidence to the government that these individuals are covered by and are being offered minimal essential coverage. So 6055 applies, and it's for enforcement of the individual mandate. That's the purpose behind it. 6056 is for the employer, and again, what's important is the 6055 applies to the 1095B, 6056 applies to the 1095C, and basically any large employer has to comply with the employer mandate, and the way they do it is by showing evidence of that by completing the 1094 and the 1095C. All right. Now for 2017, as the slide indicates, for 2017, the 2017 forms were released on December 29, 2017. Now these are all the forms that apply in this situation. We've gone through the 1095B, the 1095 and 1094B, and again, that's for the individual mandate purposes. We've gone through the 1095C and the 1094C. And again, that is for the employer mandate and some situations the individual mandate purposes. The remaining form, which we will not go over today, is the 1095A. And if you buy your insurance through the exchange, then they will give you to show evidence of coverage, show the evidence of coverage by giving you a 1095A. Now, please tell your employees that they don't have to attach these forms to their 1040. Just make sure you tell them they have to keep it in their records just to make sure if they're ever challenged whether they had coverage or not, they can show the IRS either a 1094B and or a 1095C. So who must file? And as I indicated before, an ALE is an employer that has 50 or more full-time and full-time equivalent employees, and only those individuals, technically they were full-time for a month, will get a 1095C. All right. So an ALE must provide a health coverage through an employer-sponsored self-insured plan. Also has an additional obligation because of the individual mandate purposes to give a 1095C or B to any individual who's enrolled in the plan. So in some situations, you may have to give a 1095C to show coverage for those individuals that are part-time that are covered by your plan, or anyone who is retired or is on COBRA if you're self-insured. So if an employer offers health coverage through a health plan and some of the enrollment options under the plan are under employer-sponsored self-insured programs, and again, and some are insured, just have to make sure that the forms are completed according to the coverages involved. In some situations, you may have to complete Part 3. In other situations, you may not have to complete Part 3 because the insurance company is giving the employee a 1095B. So please understand that, and that makes it get complicated. So if an employer that provides health coverage through an employer-sponsored self-insured coverage, they will generally only have to complete, they will have to complete parts 1 and 3 for anyone who is enrolled. But if they're a full-time employee for the employer mandate purposes, they will have to complete Part 2, because that's where the employer mandate comes in to show what was offered to the employees that were full-time for the employer mandate during the year. Now, for all 12 months of coverage, employee is not a full-time employee and they're covered with a plan, there's a special code 1G for all 12 months. That's for retirees or anybody on COBRA. So the next question, when does this have to be filed with the Internal Revenue Service? If you file it on paper, it's February 28th. If it's filed electronically, it's April 2nd of 2018. So, and if you have 250, you're filing 250 more, you have to file it electronically. If you have less than that, you can either file it on paper or electronic. There is an automatic extension you can file. You can have that granted. It's a form 8889. I'm sorry, 8809. And it has to be filed, and it will grant it automatically, but you have to file it by the due date of the return. So again, now remember, these dates are the original dates that always had to file. And in the past couple of years, what's happened is they've granted automatic extensions. This year, it doesn't look like they're going to actually grant an extension. So these are the original dates always applied, but now they haven't granted any extensions. So please remember, this is extremely important to understand. Okay. So again, if you need an extension in this situation, you have to file an 8809. All right, now let's go on to the next slide. So all entities reporting 6055 must furnish a copy to the employees. And in this situation, you have to do it on or before January 31st, 2018. It has to be given out. If these dates look familiar, this is the same time that W-2s are due. And so far, there's no indication from the Internal Revenue Service they're granting an extension for that. So please understand that. January 31st was always the date that was there. In prior years, they've given an extension for this. So this is due fairly quickly. And it has to be given, furnished on and before January 31st. It can be provided in paper or electronically. But the employee has to agree for electronic distribution. So let's quickly, let's go through the 1095B. We've gone through the form. Let's just go through each section of it. So here, the responsible individual indicate the name, address, and social security number of birth of and this is the individual employee. This is the primary insured employee, former employee in this situation. And as I indicated in line 8, there's a number of different codes. Line 8 is Small Business Health Options Program, SHOP if it's purchased through SHOP. If an employer, the code that's extremely important is B, which is employer-sponsored coverage. C is governmental sponsored program, Medicare, that type of thing. D is individual market insurance. E is multi-employer plan. And F is miscellaneous minimum coverage, which is doesn't fit any other categories, then you choose F. As I indicated in the previous, part 2 is the employer-sponsored coverage. This is only completed by insurers of an insured plan. Insurance companies entering either Part A or Part B, codes A or B, will complete Part 2. Employers that are self-insured don't complete this, and they will go on to Part 3. Part 3 is completed, indicate the name and address of the entity providing coverage. If the coverage is insured, the insurance company's name will go there. If the coverage is self-insured, that the employer, the government, or any other entity providing coverage will put their name there. And then make sure on line 18 the telephone number of the contact person must be entered. And as I indicated before, anyone who's covered by your plan, either part-time or full-time, name and social security number of each covered entity. If the social security is not available, you put their date of birth. And again, part 4 is extremely important, and this is extremely important for the individual mandate. Make sure this is correct. And it's for You must be covered by at least 1 day of the month. So please, it's extremely important to make sure whoever completes this gets this correct, because if it's not correct and there's any gaps in coverage, the IRS will, excuse me, will pick up on this, and your employee may be penalized. Now, this slide talks about if anybody is sponsoring an HRA, health reimbursement arrangement. If it's either, if you're an employer and it's sponsored, if you are self-insured or insured, and it's integrated with a group health plan of yours, there's no separate filing for that HRA. The only time that there's a separate filing for the HRA, and there's a few employers that do this, if an HRA and you allow employees that are covered by the spouse's plan to get reimbursed. In that situation, then you would have to file a separate 1095-C or B for that HRA. Please understand that. That's what this slide is trying to say. So normally for most employers, there is no separate filing for HRA, because remember, under ACA, HRAs would have to be integrated with a group health plan. The only exception to that is that this indicates if you allow employees of a spouse plan to be reimbursed, in that situation, you would have to file a 1095-C. Okay. So let's look at the 1094-B. The name and address, employer identification of the entity filing the return. It would be the insurance company for most employers if you're insured. Line 4 is a contact telephone number that must be indicated, and then the total number of 1095-Bs. Okay, so again, this is extremely important that all this is filled out. Okay, so this is extremely important. Let's go on. Let's look at the 1095-C, which is the next form. So here, again, lines 1 through 6, the name, address, and social security number of the employee offered coverage. 7 through 13 is the name and address and employer identification number of the ALE member, and as I indicated before, it should match the W-2. Whoever is issuing the W-2 should be the same individual entity that's issuing the 1095-C. And then line 10, indicate the telephone number of the person that the employee participant can call if they have any questions. Now, one of the issues and problems with this is that when an employer receives this, they're going to have a lot of questions what the codes mean. Please, if you need an explanation of what the codes mean for the employees, I have some forms that you can give the employee to explain it. Let's go on to the next form. So here, enter this plan start date, that's optional. And line 14, and line 14 is the applicable code for the offer of coverage. If the offer was made for the entire calendar year, you place in the first column. And a code must be entered for each calendar month, January through December, even if the employer was not a full-time employee for one or more of the months, and there's codes that indicate that. And entering the code identifying the type of health coverage actually offered by the employer, not the coverage that they took. So if you offer 3 plans, you want to do the cheapest plan that qualifies. All right. So let's look at the different codes. 1A is a qualifying offer. This is minimal essential coverage providing minimum value offered to full-time employees with employee contribution for individual coverage equal to or less than 9.66 for plan years beginning in 2016 9.69 for plan years beginning 2017. And this is based on mainline single federal poverty line, which is approximately about $12,000. And at least minimal essential coverage offered to the spouse and dependents. Very few employers can do this, but if you can, and if you want to use this, if you use 1A, you don't have to complete line 15. So if you're very generous, for example, and the employees pay very little for their coverage, you may want to use 1A, and then you don't have to complete line 15. And then code 1B, minimal essential coverage providing minimum value offered to the employee only. So you don't offer coverage to the rest of the family. If you put 1B in there, remember you're going to be penalized. Remember that. 1C, and again, this is an offer of coverage, not what they actually took. 1C, minimal essential coverage providing minimum value offered to the employee, and at least minimal essential coverage offered to dependents, not the spouse. 1D, minimal essential coverage providing minimum value offered to the employee, and at least essential coverage offered to the spouse, but not the kids. Again, if you put 1D in there, you're going to be penalized. 1E is you offer to the entire family, and you offer to the spouse is not conditional. What does conditional mean? It means that we're only going to give you coverage if your employer doesn't offer any coverage at all. That's what that means. One F, minimal essential coverage not providing minimum value offered to the employee or the employee and spouse or dependents, or the employee, spouse, and dependents. If you put 1F in there, then you're going to be penalized. 1G and 1H. 1G is employee who is not, 1G is, again, situations if you're self-insured and they offer coverage to an employee who is not a full-time employee. So these are people in COBRA, retirees, or part-timers. You use 1G. 1H, no offer of coverage. Now, 1G is extremely important because these are months that there was no offer of coverage, and there could be situations where that's fine. That person wasn't full-time, that person was not employed, so 1H is an extremely important code to use if you have a lot of turnover. 1J and 1K is used only if the offer of coverage, see, 1J is minimum essential coverage providing minimum value offered to the employee and at least minimum essential coverage conditionally offered to the spouse. And again, this is a situation where you remember under ACA, you're not required to offer coverage to the spouse, so it's no big deal, but you offer to the dependents. Here, minimal essential coverage 1K, providing minimum value, and at least minimal essential coverage offered to the dependents, and at least minimal essential coverage conditionally offered to the spouse. So if you have conditional offers to the spouse, again, if you use 1J, you could be penalized because you have to offer coverage to the dependents. 1K, there's no problem. But that reflects the conditional, and this is the second year we've used this. So you have to decide, and there could be situations where 1H is fine, and if you look at the previous slide, a good 1C and 1E are codes you may use because that means you offer coverage situation that meets the requirements of ACA. Now let's look at part 2. Part 2 is the employee offer and coverage, and part 2 is basically where you demonstrate the fact of what the employee contribution was under your program. Now you only complete it if you use codes 1B, 1C, 1D, 1E, 1J, and 1K. If you use, as I indicated before, 1A, you don't have to complete this form. And again, it's not the It's not the contribution for the plan they took, it's the cheapest plan that you offer. Now, if the employer did not offer health coverage or offered health coverage that was not minimal essential coverage or did not provide minimum value, do not complete line 15. So again, it's what the employee would pay for the cheapest plan. Now, line 16, as I indicated before, line 16 reports a number of different events. Line 16, enter the applicable code, including the safe harbor codes and other relief that the employer is for each calendar month. If the offer was made for the entire calendar year, you put the code in the first column. If none of the codes apply, leave it blank. And the employer enters the applicable Series 2 codes, if any of the line 16, to report one or more months of the following different events. The employee was not employed. The employee enrolled in minimal essential coverage offered. The employee was in a limited non-assessment period, which means a waiting period or a measurement period. The employee met one of the affordability safe harbors, or the employer was eligible for the multi-employer interim rule. So all these things are reported in line 16. That's what makes it complicated. So let's look at each code. 2A is a popular code because of the fact that if the employer was not employed for any day of the month, so you could use it, for example, at the beginning of the year if that person was employed, or at the end of the year if they quit. 2B, enter the code if the employee is not full-time for the month and did not enroll in minimal essential coverage, or use code 2B if the employer is a full-time employee for the month and whose offer of coverage ended before the last day of the month, solely because the employer was terminated. Now, if your coverage ends before the last day of the month and that person terminates, you have to use 2B. Another important code is code 2C. If that person was covered by the plan, you use 2C. So for most of your employees, that's going to be an extremely important code. 2C is going to be very important. 2D, for any month that person was either in a waiting period or in a measurement period, you use 2D to indicate that. Now, if you have any employees that are union and they're covered by a union plan, you have to report that. For any month that you actually pay for them to be in the union plan, you use 2E. Even if they're not participating, you pay into it, you use 2E. Now, 2F, 2G, and 2H. The instructions are very unclear in this, but that's what that means. This only applies for those employees that waive coverage, and what you have to indicate is that what affordability safe harbor applies. 2F is the W-2 safe harbor, 2G is the federal poverty line safe harbor, and 2H is the rate of pay safe harbor. These codes 2F, 2G, and 2H only apply if somebody waives coverage. If somebody took coverage, you use 2C. So again, it could be a situation where an individual could have 2 or more codes in 1 month. So if they're not working, you use 2A. If they terminated early and their coverage early, you could use 2B. If they're covered by the plan, you use 2C. If they're in a waiting period or in a measurement period, you use 2D. And if they waive coverage, you would use 2F, 2G, or 2H. That's where it gets complicated. What's a limited non-assessment period? Generally, and this explains all of the situations, but generally there's 6 different situations, but what's most common is anybody in a waiting period or in a measurement period. That's when 2D would apply. These are all the different situations that apply. You can look at that later. We're running out of time and I want to make sure I cover everything. Now, this part is only completed if you're self-insured. And again, this shows who is covered by the plan. If you're self-insured, this satisfies the requirements for the individual mandate. That's what that does. All right, so if you're insured, you don't have to complete part 3, but you have to indicate for every individual that's covered by your plan. This includes non-employed, director, retired. Because it's for the individual mandate, this has to be completed. So for the use to individual who is not an employee, you use code 1G. Extremely important to understand that. And again, for HRA coverage, as I said, if your plan is integrated with a group health plan, you don't have to, again, report separately to HRA. Only if you reimburse, if that person was covered by the spouse's plan, then you would have to file a 1095-C for that situation. But in most situations, the HRA is not individually, it's not separately reported. Let's go on to the 1094-C. Here, bear with me a second. The name and address and employer ID number of the member, the employer that's actually going to file the return. Line 7 and 8 are the contact person. Line 9 through 16 is only completed if it's a designated governmental entity, and I explain what that is. If one governmental entity is filing for another. And line 18 is the total number of 1095-Cs that are filed. Box 19, check if it's an authoritative transmittal. 9 times out of 10, you should check the box. The only time you would not check the box if you're filing it more than one 1094-C for a division of a company. In most situations, your 1094-Cs would be authoritative. If only one 1094-C is being filed by a member, that 1094-C is, again, it contains all the different units of that division, then an authoritative transmittal. If multiple 1094-Cs are being filed by a member, then one of them has to be designated as a authoritative transmittal. And each separate EIL member must file their own authoritative transmittal. So in 3 divisions with 3 separate EINs, there would be 3 authoritative transmittals. Lines 20 to 22 should be completed, but only if it's an authoritative transmittal. Line 20, you enter the total number of 1095-Cs, and this number includes the 1095-Cs for the full-time people. And line 21, you have to indicate, if you're a member of a control group, if line 21 is completed, then you would have to, again, complete part 4 of the 1094-C. And again, this is control group, brother, sister, parent, sub, affiliated service group. If you remember, and you have to list all the other members. Now, again, as I indicated, very few employers can do this. If you look at Part 22, there are various eligibility requirements, qualifying method. Here, the box is checked if the employer is eligible to use the qualifying offer method, and the qualifying offer method means that the employee doesn't pay more than 9.68 or 66 of the federal poverty line, and you have to do it for 12 months. This explains what a qualifying offer is. And again, very few employers, if you pay the entire cost of the coverage, you may want to use this. If you use it, what this explains here is the fact, instead of giving the employees a 1095-C, you can give them an explanation of what this is, but this is only optional, And since it doesn't get you out of filing a 1095-C, most employers never use this alternative method of distribution. And this explains it. Now, the 98% offer method, which is box D. This box is checked if the employer is eligible for and using the 98% offer method. To be eligible to use this method, the employer must certify that for all months in calendar year, the affordable health coverage providing minimum value was offered to at least 98% of its employees. And if you do that, then you get out of, again, completing column B in part 3 of the 1094-C. That's the only advantage of doing that. So if you do offer to everyone, you can check that box and get out of completing part B. Part A, minimal essential coverage, where this explains the fact that to answer yes, you must offer coverage, minimal essential coverage, to 95% of the employees and their dependents. Please understand that. And an employee in a limited non-assessment period is not counted for this purpose. In column B, full-time employees, again, you exclude those people that are in a measurement period or in a waiting period. And if you are eligible for the 98% method, you don't have to complete that. For total number of employees, that's line C, and the employer must choose to determine that number either on the first day of the month, the last day of the month, the 12th day of the month, the first day of the paid period that starts during the month, or the last day of the first period. So you have 5 different methods to determine all your employees. And you have to, if it has changed during the year, then you basically would have to do is make sure you reflect the number for each month during the year. If you're a member of a control group, you have to indicate this in column D, put an X for each month you are a member of a control group, and then column E as reserved, because in the past it was for transitional rules. If you're a member of a control group, in part 4, as this explains, you have to list all the other members of the control group. Now, penalties. In the past, there was good faith compliance. If you made a good college try, then the IRS will not penalize you. That is gone for 2017. And if a reporting entity, if an employer fails to comply with 6055 or 6056, and the forms are not complete and correct, you could be penalized. There are 2 penalties. $260 per return if they're incomplete. So failing to send a corrected return to the IRS is $260. There's another $260 if you fail to provide a complete return to the employees. So again, it could be $520 per return if they're incomplete or incorrect. Now, depending, if you decide to get it late, there's a 30-day rule that indicates that, and the penalty is reduced to $50 per return. And if the failure is corrected after the 30-day requirement or on or before August 1st, the penalty is reduced to $100. So again, try to get them on time. There's a 30-day rule. There is an August 1st rule. So what information do you need to complete the returns? The employment date of each employee who became full-time in 2017, months during 2017 which the employer was full-time or part-time, months in 2017 which the employer was subject to a waiting and measurement period, months in which the employer was offered minimal essential coverage, months in 2017 which the employer was covered by minimal essential coverage, months in 2017 which minimal essential coverage was offered to the spouse and dependents. If the employee waived coverage, what the affordability safer applies, and for each month, the amount of the employee contribution for the lowest cost option, not the actual option they picked. And for self-insured plans, the name and social security number of each member of the employee's family that was covered. So for each employee, all this information has to be collected. For each employer, who is a member of your control group? The names of each member, the total number of full-time employees in 2017, the total number of all employees in 2017. If the employer has subsidies and each has its own EIN, each must, again, subsidiaries, that should be subsidiaries, each must file their own 1094 and 1095. So again, as you can see, this requirement is extremely complicated. Amanda, is there anything else you want to say?
We have a whole bunch of questions.
Yay!
All right, so the first one, 1095C, line 14. What if you offer coverage to the employee and all dependents, not conditional, but costs the employee more than the FPL?
Then you would have to make sure it's probably affordable with all the other. So you don't use 1A. You just indicate the fact it's affordable by the other safe harbor methods. So 1A is not used. 1A is not used.
Okay.
And most employers don't satisfy the federal poverty line. So, and as I indicated, you only use it if the employee pays very little for their own coverage. Understand that.
Does 2C trump other codes?
Yes. That's an extremely important code. I can't stress. For all employees that were covered by your plan in 2017, 2C trumps all the other codes. If anything you learned from this seminar, that's the most important thing.
Can you use the 98% offer method if the coverage is not affordable?
Just a second. I don't want to give you... see what the rules say. Just bear with me here.
Absolutely.
Just see what it says. All right. In regard to the 98% method, I flew through that, and I apologize for that. An employer must certify that it offered all months of the calendar year affordable health coverage providing minimum value. So it's got to be affordable.
Okay. And then if you could just clarify, going back to the, can you use on line 14 if coverage isn't, doesn't meet the federal poverty level? They're saying all the other codes don't fit because the employer offers coverage unconditionally to all employees and all dependents.
Well, let's look at the codes. I mean, so 1A is only applicable if it's federal poverty line. So if you look at the other codes, for example, 1E, minimal essential coverage providing minimum value offered to the employee and at least minimum essential coverage. So here, it doesn't have to be affordable. So if you look at the codes, it doesn't have to be affordable.
Okay.
It just has to be minimum value. It's got to be minimum value and at least minimum essential coverage offered to the, so it's got to be minimum essential coverage providing minimum value. So that's all we're saying. Affordability goes out the window. And what's interesting about that, here's what's interesting. If your coverage is not affordable and the employee takes it, and you put 2C in line 16, there's no penalty. The only time that affordability comes in is if they waive coverage, then you can't put one of the codes, the safe harbor codes, and that will stand like a sore thumb. So that's the only time it's if your coverage is not affordable, minimum value, and they take it, no harm, no foul. But if they waive it, in line 16, for those months they didn't take the coverage, you can't put the safe harbor codes there.
Okay. Can you verify the percentage of compliance, that the percentage of compliance continues to be 95%?
Yes. It was 70% in prior years. Now it's 95%.
Gotcha. If the employee portion of the employee-only premium exceeds 9.69% of the employee's gross income, is that unaffordable?
Yes. Well, no. There's three safe harbors. One is rate of pay, which is whatever they're paid per hour times 130 hours. The other is W-2, and the third one is federal poverty line. The only time gross salary comes in is for the subsidies, not for this. So the government realized when they were enforcing this, there was no way that the employer will ever know the salary or the gross income of the individual. So they said, we're stuck. What are we going to do? So they came up with three different safe harbors. Amanda?
And what should the employer do if they put the wrong code for 2016?
Try to correct it. Because good faith compliance, you could correct it, and for 2016, 2017, they're going to be harder. We don't know at this point how hard they're going to be, but basically what you're doing is when you file it, it's got to be correct. So if you make errors, you could be penalized.
Got it. All right. Well, Larry, thank you so much. I think it's clear by the questions that this is a really hot topic. Guys, we'll be continuing to post. We'll be continuing to post more resources about the Affordable Care Act as reporting season ensues. So if you haven't already, please go to benefitexpress.info/subscribe to get all of our resources as we put them out. Now, please
remember one other thing. Please remember, people, once Trump got elected and he issued that executive order, the fact that they were not going to enforce it. The IRS is coming out and saying, we're going to start sending letters on this, the employer mandate. So please, despite the election of Trump, the IRS is now enforcing the individual employer mandates. So again, until they're repealed, both the individual employer mandates, penalties will apply. Okay?
All right. Larry, thank you so much. You guys, thank you for joining us. Again, our next webinar will be on December 19th, and we'll be reviewing consumer-driven health plans, and you can register right on our website. We'll talk to you then.
Take care. Bye-bye.